Want to see your money growing exponential? That is actually how our funds are doing. So, and here you see the basis. Here you see basically the backtesting of our strategy, what we utilize in our crypto funds currently, and also will utilize in this trading too. So this example, what you can see right now, it's basically on Nasdaq chart, and you can see that actually it's around 8 years period. And here you see basically this blue line somewhere down on the bottom is actually buy and hold strategy return, and that is probably around 380%. However, actually, with over strategy, you can gain up to 7,000% in 8 years' time. So, if that plays out also in the next 8 years, it's definitely crazy, but there is still a lot of probability to play it out in also in the next 8 years, because for example here we see also in the previous years we have seen quite a lot of volatility regarding markets itself. Also there have been some crazy periods where there was, as you remember, COVID, wars and everything. So therefore I suppose also with taking into account this money supply and money cycles, basically liquidity cycles, which is approximately 4 years. And that means that basically currently it's also a good period to begin actually, because this next up to 12 months will be most likely one of the most bullish ones, and then we can see some decline later on, because there are a lot of bullish steps to be in the markets, because first of all quantitative easing, secondly US elections, thirdly liquidity increasing. So there is already going on quite money printing in United States. So there is a lot of bullish things which will create more money into the circulation, more money into the markets, and in the end also quantitative easing with decrease in interest rates. So that's how it looks actually Nasdaq. On the Nasdaq chart over strategy, we can also play it out on the different assets. For example, we can put it also in the Bitcoin, and let's see how actually it looks on the Bitcoin. And here you see that basically this bear run, previous bear run, and the big fall in the markets is actually creating this sharp crack, I would say, in our projection line. But if you are smart enough to hold it true, and also smart enough to invest more in these regions when there is actually the fund is down, then you land again on the new all-time highs very soon. And here you basically again uh, fund is basically looking like there have never been such a big down move. So therefore it's brilliant strategy to utilize, and also those things we are planning to also hedge in those periods. So therefore most likely we will not see that sharp cracks in our funds in the future. So, and that's, for example, if you put it on the Bitcoin. Let's see what else we can test with it out. For example, we can put it on also on the Hong Kong index. So I think the next big thing will be to actually diversify between different indices and different regions. So first of all, you can follow maybe Nasdaq, you can follow SP 500 that's related to USA. Then you can follow, for example, German 40 that's more about European indexes. So, and then you can follow, for example, maybe UK SIMS, UK 100, which is actually UK index. Then again, I think it's good to also cover Asia and China. So China, there is Hong Kong 50, which is absolutely a nice one to follow. Also can look for the Japan index and also probably Australian one. So, and then if you like diversify between those indexes and use this strategy adapted to the index itself, then there is this potential to actually gain 10x, 20x, maybe 30x, maybe 50x more than actually index gains itself. So, and that's definitely huge return for the risk asset, passive. And also what is brilliant that it's actually passive income if you join our funds. So that being said with the index, because index is, first of all, of course, crypto right now is amazing, and crypto will be amazing, I think, next decades. Definitely there is also this a lot of adoption going on, and lots going on to increase the usage of the crypto overall. So that's, I think, just the time when all the monetary system will be on the blockchain. But that this is only the financial sector. Indexes actually covers all the sectors and all the hot topics currently in the economy. Basically, there you can, by investing in index, you also invest in the top AI companies, you invest in the top medical companies, you invest in top basically any sector companies. So, and that's the basket, which is definitely probably the smartest way to run your money with, because otherwise if you hold it on your fiat, you basically have this chart just opposite way, basically geometric progression to zero. And that's definitely what you don't want to see in your account. Your buying power just decreasing and decreasing even faster. So that's definitely not what you want to see in your accounts. So with that being said, I also want to share with you, I guess, one more thing where you can look at over strategy utilization and the possible returns that can be. I showed you Bitcoin, I showed you Nasdaq 100, and currently also Hong Kong index. So let's see how it looks on, for example, German 40. Also in German 40 we see pretty nice gains. There are some also big drops on the way, but that's basically almost the same cracks as seen previously. So that's about our funds and our philosophy and the strategies. Let's go on what is actually happening with the data currently and lately on the cryptocurrencies. And here we see that basically last around 10 days there have been positive inflow for the ETFs. But on the chart wise, actually right now there is a little bit stagnation, a little bit down move pressure. Let's see how actually the chart looks like. Let's just open the Bitcoin chart. There was this huge move up which was created by this Ethereum ETF acceptance, and now I think it's all about waiting actually when it will start trading. There will be those volume increases in the times when actually it will start trading. So currently probably there is now such a big impulse, and to get this next leg up and to get out of basically the region we are from already, I think February, end of the February. So we need some real impulse on the positive direction. So right now we are just again trailing on this region, and any strategy which is basically channel trading or sideways trading or strategies which utilize both directions, basically shorting and longing, currently are playing out great. But it's just until the point when actually we will break out, and then it will be all about longing, and then longing will be definitely the best. So, and therefore on the risk side still there is this geopolitical situation, but I don't think so there will be some huge increases currently regards that. And also probably the market typically, actually takes that situations into account in quite short time frames. So there is a sharp moves probably on down, and then the same sharp moves up quite shortly. So therefore, I'm not that worried about those circumstances if there are some negative news regarding geopolitical situations. But we want to see this next step regards quantitative easing policy and really liquidity increase and liquidity cycle like explosion. And so then that can create this next breakout of this region from the 60 to 72k Bitcoin. So uh, and that's why I also would like to share with you. I would like to share with you economic calendar actually that can explain a lot in the latest developments of the economy, liquidity cycle, and where we are standing on the region itself. As I told you in the previous video, basically there are critical information coming out this week, and there was already. So let's go through the data and what the data actually are giving us this previous week. Basically, the first of all, there was this consumer confidence in the May, which is actually positive, and that is anyways a good sign. However, we are going forward to the next big thing, which is let's just wait for it. In yes, here it is. GDP. Actually, GDP for United States is negative, and also initial jobless claims is growing. So, and this basically this pair of information means that there is a bit increase of likelihood to actually increase the liquidity for the Fed and uh, take the monetary easing steps quicker, because decrease in GDP means basically a recession, and also increase in jobless claims means that there is more people without the jobs, and that is also risk increases. So therefore, there have to be some economic stimulus made regards those data. So and that's why also we see in the last days actually already money printing is going on. We do not see it yet in the markets a lot, but it's just a matter of time. And then also there is Chinese data, which is not that important for the markets overall, but there is also important data regards that. And the Chinese is currently also sliding a little bit into the recession phase. And then there is CPI from the European Union, which came out green. That is also actually not that good for quantitative easing in European Union. But however, I don't think that runs the markets right now on the down move direction. So I think that will be shortly lived, and soon we will see also a next leg up. So, that being said, thank you for your attention. As I told you in the beginning of the video, check out our funds and join if you want really good, stable growth for your account. So, thank you very much and see you in the next video.